India's exports are witnessing a major shift. For years, petroleum products dominated the charts, but now electronics are catching up quickly. India's electronics exports have hit a record $48 billion in FY26. That's a 24.3% increase over the previous financial year. In FY26, the gap between electronics and oil exports has reduced to just $5.9 billion. 4 years ago, it was $73.9 billion. That's a massive shift. But what's driving this surge? The key reason for this growth is the boost in smartphone exports. Between April and January FY26, smartphone exports to the US totaled $15.8 billion, a jump of about 138%. India also exports smartphones to key markets such as the UK, the UAE, and the Netherlands. The PLI scheme launched in FY22 has significantly boosted manufacturing and exports. Also, the electronic component manufacturing scheme has strengthened the domestic electronics component ecosystem. Together, they have led to a surge in the overall electronics exports. At the same time, oil exports are slowing. India exports a range of petroleum products, including aviation turbine fuel, high-speed diesel, naphtha, bitumen, pet coke, and more. In FY26, petroleum exports stood at $53.9 billion. That's a 15% decline compared to last year. This is largely due to ongoing West Asia tensions that have significantly disrupted global energy markets. To understand this shift, let's take a look at the trends. In FY22, petroleum exports were at $65.4 billion. Electronics exports stood at $15.7 billion. In FY23, petroleum exports jumped nearly 30% to $97.5 billion, and electronics exports reached $23.6 billion. The gap widened sharply to $73.9 billion. But as the PLI scheme gained momentum, the gap started narrowing. In FY25, petroleum exports dropped to $63.3 billion due to lower global oil prices and weaker demand. On the other hand, electronics exports increased to $38.6 billion. And now the gap has narrowed to a record low. Based on these trends, industry experts believe electronics exports could overtake petroleum as the second largest item of commodity exports by FY27. The government is already working on a new PLI scheme to boost mobile phone exports. The PLI 2.0 is likely to be rolled out by May with an outlay of about 46,000 crore rupees. The Ministry of Electronics and IT is in discussions with the Finance Ministry, after which it will be sent to the Cabinet for final approval. The Indian Cellular and Electronics Association also aims to produce 30 to 35% of world smartphones in India within the next 5 years compared to the current 18%. It is targeting mobile phone exports of $55 to $70 billion over the same period. India's electronics exports are picking up pace. And if current trends continue, electronics may soon become the biggest contributor to the country's overall exports. Follow Business Standard for more such stories.